So you have a lot of equity in your home and you're wondering how you can possibly use it. Well, we've been getting this request a lot, and it's, can you start a business with that equity, or should you? And in this episode, we're going to cover some crucial tips and considerations that you should keep in mind if you're thinking about doing this. We'll explain what home equity is, ways to access it, the pros and the cons, using equity to fund your new business, alternative options and steps that you could take once you've decided to use your home's equity. Let's talk about what is home equity and how does it work, or how can you have access to it. Home equity is the difference between the current market value of your home and the outstanding mortgage balance you owe. So as you pay off your mortgage over time, you gradually build equity in your home. This equity can be valuable for financing a new business venture, as it allows you to borrow against the value of your home. But remember, keep in mind that your home is used as collateral, which means that if you default on your loan, your home could be at risk. So keep that in consideration. So there are three ways to have access to your home's equity, or to obtain the access of the equity. So we've got a home equity loan, home equity lines of credit, and a cash out refinance. So let's start off with a home equity loan. This is a lump sum of money or a loan that you receive based on the equity that you have in your home. You'll pay back the loan over a fixed term at a fixed interest rate. Now let's go to the next one, a HELOC, a home equity line of credit. This is like a revolving credit card, and it's based off of your home's equity as well. And you can borrow money as you need it up to the predetermined limit, and you pay it back, and you can borrow that money again with interest, of course. And lastly, we have a cash out refinance. This involves refinancing your existing mortgage for a larger amount than you currently owe, and you receive the difference in cash to use for your business. Now, what are some of the pros and cons of using your equity for your business ventures? A pro is lower interest rates. Home equity loans and HELOCs typically have lower interest rates than other financing options. Another pro is the tax benefits. The interest paid on home equity loans and HELOCs may be tax deductible. The flexibility. You can use the funds for various business purposes, purchasing equipment, hiring staff, making an investment to increase your business worth. So those are some of the pros. Now let's talk about some of the cons. Risk to your home. If you fail to repay the loan, you risk losing your home. The reduced equity. So borrowing against your home's equity reduces the equity that you have, which could impact your future financial plans. Potentially difficult in selling your home. If you have a high loan to value ratio, it may be harder to sell your home because of commissions. You won't have enough for the commissions, or for whatever reason, doing upgrades and all that good stuff. Now, there are some alternative options. If you're not comfortable using your home equity to finance your business, there are alternative options, of course. A business loan, which these loans are designed to specifically help your business, and it's for business purposes only, and can offer competitive interest rates and terms. Of course, now you have personal loans. If you have a strong credit score, you can consider a personal loan for your business. As well, you could do crowdfunding. You can use platforms like Kickstarter, Indiegogo to raise funds from the public in exchange for rewards or equity in the business. So now let's kind of shift. Now that we've given some alternative options, let's talk about the steps you can take once you decide to use the equity in your home to fund your new business. So you need to assess your financial situation. You need to ensure that you have enough equity in your home first, and good credit, before applying for a home equity loan or a HELOC, because this will determine your rates, the qualifying purpose, if you qualify for the specific mortgage. Research and compare different options because they're not all the same. Look into various lenders, of course, and their terms, interest rates, and the fees associated with obtaining that specific type of loan, and make sure it fits your needs. Next, you should create a detailed business plan. Lenders will want to see a comprehensive business plan that outlines your goals, strategies, financial projections, and this also will help you determine how much you need to borrow. If you don't already have a financial advisor, consult with one. Speak with a financial advisor to ensure that using the equity in your home to finance your business is the best option for your financial situation. Next, what you do is apply for the loan or the line of credit. Once you've chosen a lender, submit your application and provide all of the necessary documentation to the lender. Then they will evaluate your application and decide whether to approve it or not. Make sure to use the funds wisely. Once you have access to the funds, use them responsibly and according to your business plan. And remember that so that you can ensure you can repay the loan and grow your business more successfully. And now you need to monitor the business's financial performance regularly to review your business's financial performance and adjust the strategies needed. Now, this will help you stay on track with your loan repayment. That's important, and grow your business. Guys, the important part is if you're going to use your home's equity, remember to do your research, create a solid plan, consult with a financial advisor before making any decisions, and make sure that this is really going to grow your business. Of course, nothing is 100% certain, but make sure that you've done all of your homework. You've dotted all your I's, crossed all of your T's, come up with, hey, worst case, I'll make X, best case, I'll make X, and make sure that you are still comfortable. If you don't make anything for the next 5, 6, 7, 8 months, a year, depending on how long the startup is, make sure that you're still comfortable with your mortgage payment and your new line of credit or home equity line or the new refinance cost of your house. Make sure that you are comfortable with paying that for that predetermined time while you get the business up and running. And make sure, as I said, do your research, speak with professionals, have them guide you and give you advice on how to use the funds wisely. So guys, thank you so much for tuning in to this week's episode. As always, we appreciate you. We love your feedback. Leave us a comment down below. Send us a DM. Let us know what you think of this week's episode. And as always, share this with a friend who you think might find value in this episode. Thank you so much. See you on the next one.